there was a lot happening in probably the hottest commodity that exists in the world today in terms of the supply and demand fundamentals. And some big people are taking notice. Even Goldman Sachs, there's been talks about, will there be Russian sanctions? How would that affect the uranium market? And today to discuss that, we have my good friend, Justin from Uranium Insider. I want to say I highly recommend everyone sign up to Uranium Insider. The link is right there down below in the description and pinned to the comments. I'm a paying member myself. They just put together a quarterly option as well that's very affordable for everyone. I highly recommend you check that out and give it a try. This may end up being one of the most amazing opportunities that exists out there in the investing world today. So be sure to check out Uranium Insider. It's the leading sole uranium newsletter that covers everything happening in the markets, what to buy, what to sell, and understanding the entire macro thesis behind it. So you can check that out right there down below. We'll give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla. And give us a comment down below. This is Go Uranium Go right there down below. And if you enjoyed today's episode, you can support us and send this out into the YouTube universe by hitting that like button and giving us a comment right there down below. So it's good to see you, Justin.
Yeah, good to see you as well, Jake.
All right, so that's big news. Goldman Sachs getting involved. It seems like the big money that got involved during the last historic uranium market, some of those type of upper echelons seem to be taking note now, right?
Indeed, yeah. This is kind of a great example of what John Ciampaglia, the CEO of Sprott, has been talking about over the past number of months, not only through private conversations that we've had with him, but he's mentioned in interviews as well that he's been speaking with very, very large funds where we're talking potentially hundreds of billions assets under management. And in some cases, even north of $1 trillion in AUM funds, just huge funds that are expressing an interest in exposure to uranium, but they can't touch it until it has a certain amount of liquidity. One fund manager told him directly that they want to take a position, but Sprott needs to trade north of 50 million on a daily basis in terms of trading volume. And on the big spiking volume days, they'll touch that, but it's not day over day that we're hitting that volume yet. Although the volumes continue to be increasing, generally speaking, across the space. So Goldman Sachs putting out essentially what was an internal buy alert saying that they're going long spot uranium. And that was, at these spot prices, $58, $59 a pound. So pretty big deal.
Now, I would assume that a lot of this big money that you're saying that can't get involved yet, the New York listing for Sprott would be a great vehicle for that can bring more of that big money in. Although it might not be needed to send uranium to record levels, it may be essential from the big money perspective. Is that fair to say?
Yeah, I don't know if I would say essential, but it definitely would be helpful. The fact that, the institutions are not having any problem finding the Sprott vehicle on the TSX, and there's, big enough volume there. They've already raised almost $600 million this year alone through their ATM. They purchased 11.5 million pounds this year alone in less than 3 months, 11.5 million pounds, $600 million raised on the ATM. So it's not necessary. Obviously, it would be a boon for the company and for the liquidity for that vehicle, obviously for the sector as well. So we still hope that does happen, but it's definitely not an essential thing.
Now, let's talk a little bit about some of the other macro dynamics. There's been a lot of talk about maybe there would be Russian sanctions. They don't look like that's happened. My personal opinion, just my opinion, and I could be wrong, is maybe they think the United States thinks could be too catastrophic given that it's such an important strategic mineral. It is so important for baseload power supply, and we don't quite have the types of reserves and maybe other options that you get with oil, where you see Biden negotiating with Venezuela or Iran. You can't really just go to 10 other countries to figure out the uranium situation. What's your thoughts on all that?
Yeah, that's probably a good take. We haven't seen sanctions as of yet coming from the US or coming from Russia in terms of exporting uranium to the US. It's likely that, well, first of all, the US is pretty reliant on Russian uranium. I think in 2021, it was almost 20% of the uranium that was coming into the country. But what is more than likely is that there are some specific utilities that perhaps have near-term deliveries expected coming from Russia, especially in the form of enrichment would be most likely. And so if that actually poses a threat to destabilize the grid, that might be something that's off the table in terms of sanctioning. But there is an executive order that was signed by Biden that bans any future purchasing of Russian uranium products. So there likely are still plenty of deliveries out in the future for previous contracts signed coming from Russia to the US utilities, but banning future purchasing of Russian uranium from the States is still a huge, huge deal.
How does this affect the US miners? We know that there's been a lot of talk that, perhaps there's better plays than US miners in the past, but how does all of what's occurring now change the dynamic of US miners? And as someone like yourself that runs a uranium newsletter and is a professional uranium investor, has that changed your perception at all with US miners? And what's your expectation moving forward with that?
Yeah, it has. I think it's kind of for two reasons. One is for the reasons I just mentioned, that it's more than likely that the utilities are now going to have to source uranium elsewhere. So that'll potentially be from Cameco. That can be from any Australian production, from BHP. Possibly we're going to see more contracts being signed from near-term producers and development companies in Australia, potentially in Namibia, and of course in the States. It makes the most sense to keep it home here, especially when there's a conversion facility. ConverDyn's Metropolis is set to come back online next year. So then we would have essentially the entire fuel cycle, U3O8 conversion, EUP, and fabrication all happening in North America, which is a huge bonus for security of the electrical grid, security of supply. And then the other reason would be just kind of a general, movement that seems to be happening globally, largely due to what's going on with the Russian invasion of Ukraine and the geopolitical implications from that event, is going to more than likely be an increased movement towards nationalization and less globalization in terms of commodities trading and domestic production, not only in the States and many other places, but it's likely to be supportive going forward of the miners that are in the States, being that the United States is the largest consumer of uranium due to it being the largest nuclear fleet.
So what do investors need to know right now, and where do we go from here?
What investors need to know right now is that a lot of the hot money that comes into the space watches short-term catalysts. So everybody is watching for that sanction word to come in. In the meantime, we're seeing huge moves across the fuel cycle. We're seeing U3O8 be very, very strong, holding up. It's very sticky here in the high 50s, not selling off, even though the volumes have dropped off a bit in the spot market. It's a very good sign. We've seen conversion up more than 50% in less than a month. We're seeing UF6 up 15%. We're seeing EUP, or SWU, separative work unit, or the cost of enrichment, over 12% up. This is just since the end of February. And so essentially what's happening is, while everybody's watching for that quote unquote sanction word to pop up on their Twitter feed, the entire fuel cycle is responding to this disturbance and this disruption. And the flows continue to come into not only the spot vehicle, but the ETFs. We're seeing huge share issuances from the ETFs almost on a daily basis, which means money is flowing into the ETFs. It continues to flow into the ETFs. And lastly, I think what investors should understand is that in the previous commodity cycle, almost every commodity moved really strongly prior to uranium. Uranium sort of brought up the rear. And it's a commodity that moves slowly until it doesn't. And so we're basically positioned, we're fully positioned at this point. We think we're on the cusp of a very large move for the commodity.
Interesting. So you're saying oil, nickel, these types of things are in these movements are good signs, because the last market you saw these things go, and then you just see a parabolic move in uranium thereafter.
Yeah, and I think that parabolic move is more likely to happen now than ever. I haven't necessarily been betting on a parabolic move. Of course, the arrival of SPUT onto the space made that much more likely. Now that we have massive geopolitical disruption, especially in terms of very important sources of uranium, primarily Russia, of course, Kazatomprom in Kazakhstan gets thrown into the mix a bit as well because of JVs with Uranium One, because of shipping routes going through the port of St. Petersburg, et cetera. They're likely to still be a prominent low-cost producer, but let's just say the East now is a much less reliable and a much more risky jurisdiction for uranium production than it was even 6 weeks ago. And so, yeah, obviously the commodity is already responding. The big move has really yet to happen. We believe that it's coming.
So, what else do investors need to know about this kind of, I would say, rare moment in time that we're in? You and I and many listeners were bullish on uranium just before any of this happened, because the supply and demand situation was incredible. But now you're seeing, whether it's this Russian situation, one of the other ramifications of this is you've seen Boris Johnson and many other countries talking about drastically and quickly, to use Trump's term, they're doing warp speed now on nuclear power. If I'm correct, tell me if I'm correct. I believe that Boris asked for about a 25% increase in the uranium side of things, and you're seeing this from a lot of countries. What do you make of all that?
Yeah, well, that's kind of in the forefront with this backdrop of the actual disruption in the supply chain of the commodity itself and the tightening of the market, the financialization of the spot market. That with that backdrop, now we're seeing, of course, so many countries being more advocate of nuclear energy. We're seeing, like you mentioned, Boris Johnson, Prime Minister of the UK, is wanting to fast track new nuclear projects. We're seeing the Belgians do a 180 on the planned shutdown of their remaining reactors. Now they're saying they're going to give those reactors life extensions. We're seeing life extensions across the US. We're seeing the new president that was just elected in South Korea, be by far the largest advocate of nuclear of all of the candidates that were running, basically wanting to reverse course on their closures and start new projects as well, including exports. So most of the West and the East, of course, China is still going all out in their builds. That hasn't slowed at all. So they're still keeping up the pace with that goal of 200 gigawatts by 2035, and they're right now at 50 gigawatts. So they're going to 4x their nuclear fleet in the next 13 years, and they're on track to do that. So it's just it's a wild commodity. It's a wild space. The demand continues to grow for nuclear, and that's only going to continue in light of just huge price spikes in natural gas, huge price spikes in coal, major disruptions in the oil markets. So nuclear is really a great solution for that and for that type of energy disruption. And it's more and more countries are recognizing that.
In the past, you've talked about what might happen to the market cap of uranium and what might happen to the stocks. How do you factor in everything occurring right now and what that could do to the uranium equities?
Well, I think it could send the equities on a moonshot. Really, what we're seeing is a pretty big move in the spot price, and the equities haven't followed yet. And I think that has to do with a number of factors. One is just kind of a general risk-off, sort of tepid environment across the broad markets, which are continuing to feel. Two is I think that there's a lot of investors that are seeing these price spikes happen in oil, happen in nickel, and thinking that either A, it's not going to happen for uranium, or B, that these commodities are going to spike, they're going to come all the way back down and trend over. And I think that's a huge error. I think we're going to see commodities, generally speaking, go to levels that people can't even fathom. I think that inflation is not going to be transitory. I think that commodities are going to absolutely fly in the coming years. uranium is going to surprise all of these doubters, in my opinion, to the upside.
Beautiful. Anything else important that we're missing?
I honestly think those are the big pieces that we covered are really important. I would say ignore the noise, the daily noise around sanctions. I think that's really important. The commodity cycle for uranium is already disrupted, and it's going to stay disrupted. Whether or not we see actual sanctions, it's not necessarily irrelevant. Obviously, that would be a major disruption. But banning forward purchasing of Russian uranium products by the U.S. is a massive, massive deal.
So that's essentially a sanction, because they're saying if you got an existing contract, maybe due to national security, bring those in, but you cannot contract more.
That's my understanding, correct? Yeah. So this is disruption, and I again, just to reiterate, I don't think that this is going back to normal. I don't think this is we're going to see a peace deal signed. I mean, if we do, which hopefully we do in the near term, I don't believe that's about to reverse course in terms of the geopolitical implications with supply chains. I don't think that's going to go back to how it was in January. I just don't see that happening. I think that there's a much larger global shift in terms of national currencies, in terms of the petrodollar, et cetera, et cetera. That's a whole nother deeper conversation. But the implications for uranium, of course, are that we're seeing these lines drawn in the sand. And the largest consumers of uranium currently, which are the US and the EU, are having that supply chain coming from Russia, coming from the East, largely impacted. And so we're going to see a shift, and it is already impacting prices. And so that general inflationary environment, the general shifting of geopolitical ties in terms of commodity supply chains, I believe is a trend that is going to stay here for a while. And I don't think most of us are really recognizing the potential disruptions and implications from that going forward. And the best thing that we can do is try to have exposure to investments that we think are going to benefit in that environment, and I think that's commodities. And obviously, I feel strongly that uranium is going to be one of the big, biggest movers in terms of reward versus risk.
Now, what if somebody is not invested in uranium? What do they need to know, or how do you get started in an environment like this?
It's a very complex commodity to understand. It's a very complicated market, even though the market is relatively small in terms of investable stocks. What investors really need to know is they need to have a foundation of a fundamental understanding of the macro elements of this investing thesis. That can be a complex thing to wrap your head around. It can take a lot of time to read and research. But that due diligence is absolutely essential. Of course, you can fast track that by subscribing to our newsletter as one good example of how to fast track that understanding. We try to take all of these spinning elements across this sector and distill them down into what is necessary to understand from the investing standpoint. That's and of course we put that in our monthly letters, but it's absolutely crucial to understand the fundamentals of the sector. And the reason is the volatility is huge. We see big moves in the sector to the upside and the downside. And you have to understand what's going on to cause those movements. You have to understand what's happening with the flows, the funds flows into these ETFs, into the spot vehicle. We track this stuff every day. Hugely important. Lastly, you have to choose wisely when it comes to what you're investing in. If you want to just take a shotgun approach to the sector, you're going to underperform. You're probably even going to underperform buying the ETFs. We outperform the ETFs because we have pointed investments. We take intelligently leveraged options trades as well in the space, which are returning very well for us. So you really need to understand the fundamentals. You've got to ignore the daily noise. You have to accept that volatility is part of the game. You can't have outsized gains without outsized volatility. You have to know that going in. You don't want to over allocate. The sector hits above its weight in terms of the returns when it does move. So you don't want to just put all of your money into uranium. You want to at least have some diversification because it's so volatile. But expect a wild ride in the next 1 to 2 years and potentially beyond.
Perfect. Great update. Let's conclude with how can Uranium Insider be of assistance to someone in this wealth transfer and kind of this, I would say, historic opportunity?
Yeah, definitely historic. We're not going to see this again, I don't think, in a very, very long time for commodities in general, but also for uranium. And I think this cycle has some legs. How can we help? Well, obviously, we do have that monthly newsletter. One thing that a lot of people don't know that we do is we do monthly webinars that are for our members only. It's a 2-hour long, in-depth webinar where we present our own slideshow of what's happening at that moment in the uranium space. We talk deeply about the sector, about what we're seeing. We cover all of our focus list stock investments, company investments, where they're at, what the companies are up to. We go super geeky into the sector, and we also have special guests every month on these webinars. Usually that's a CEO of one of the companies that we own and recommend. And quarterly memberships obviously have access to 3 months worth of those members webinars, which we've had amazing feedback. They're very, very valuable because we just get really, really deep into the sector. And then, of course, our recommendations, we have our own process for choosing the stocks in the space, and they've performed extremely well up to this point. We're at over 500% since our inception date of August 2019. We continue to outperform the sector. And I think we can help in all of those ways.
It's crazy that you're up 500% and then we're staring at everything that's happening right now, because it makes you go, in a normal crazy type of commodities market, in an absolute best case scenario, maybe you're expecting 10x. To be 500% staring down all this, it goes, man, where could this go?
Yeah, it's really the sky's the limit. It all has to do with funds flows. So however the institutions, I mean, man, these funds, they can get really cutthroat. When they recognize they've got something quartered, they'll just go for the jugular. And that hasn't happened yet. We're basically seeing the initial positioning of these funds. We're not seeing the jugular being gone for. And this is what happens in these markets when institutions recognize that they've got something by the balls, they go for it, and they don't let up. And I don't think investors in the space have any clue what is coming in terms of financial flows and volume and the moves that we're going to see in the spot price.
Yeah, well said. It's going to be an interesting time. We want to thank you for your update. For everyone listening, right there down below, pinned to the comments and linked in the description, you can go ahead and check out Uranium Insider. I recommend open up the browser, give it a read. They have a quarterly option as well that is much more affordable as well. So be sure to check that out. And if you're already invested, make sure you buckle your seatbelt tightly. Prepare your oxygen mask, because we may be headed to high altitudes.
Well said.
So thank you for listening today. Make sure you hit the like button, give us a comment down below. This is Go Uranium Go. Subscribe and bell notification for future episodes. And be sure to check out Uranium Insider right there down below.